today on the Tearsheet Podcast.
It's hard to prioritize all these kind of administrative financial tasks that seem like a lot of overhead and a lot of burden. And so if it can self-drive, I think people will just, be more efficient and more optimized. And that ultimately increases the likelihood that they can achieve their goals, which is what everyone wants to do. And so I think it's just really important for all but the, couple of percent of people who love doing this on the weekends, which is probably me, but I still actually appreciate the optimization because I don't have to think about it.
Welcome to the Tearsheet Podcast. I'm Zack Miller. As fintech matures, many of the early pioneers in the space are realizing how important it is to become a user's primary account. Wealthfront, which began as a robo-adviser, looks a lot like a bank nowadays. The company recently rolled out new checking account features. Hutchins is the head of autonomous financial planning at Wealthfront. He joins us on the podcast to talk about his firm's vision of self-driving money and how the future of financial services will include more autonomous banking services. Chris was previously the co-founder and CEO of Grove, which was acquired by Wealthfront, and co-founder of Milk, which was acquired by Google. Hutchins is my guest today on the Tearsheet Podcast.
Yeah, hi. Thanks for having me. I'm Chris Hutchins. I'm the Senior Director of Product at Wealthfront. I run our advice and automation team, and I work on a wide variety of things from product to financial planning to automating people's finances. And prior to Wealthfront, I ran a startup in the financial planning space called Grove, and before that have been both a venture capitalist and a founder and another startup employee at a few other places.
Awesome. Great background. I'm sure you bring all those experiences into your role at Wealthfront. Can you tell us a little bit about Wealthfront for people that might not know?
Sure. Wealthfront's a next-gen banking service that helps young professionals earn more money on their savings. We provide no account fee banking, low-cost investment management, all through a 5-star mobile app.
Great. And there's been an evolution, right? Like Wealthfront really kind of started with its core in investing.
Yes. So, Wealthfront has taken, a long stride of achievements over the last few years, but we started as an investment company. We started actually with a mission to democratize access to sophisticated investment products. And so one of the first robo-advisors on the market, setting kind of a precedent that, as I'm sure the market's seen, has kind of changed. I think almost every financial institution now has a robo-advisor. And we've since kind of spent a lot of time focused on other parts of the financial ecosystem, and really recently launched checking features for our cash account, which we launched last year. The cash account last year was kind of crazy. It was a little bit, I had just come into that, joining Wealthfront last year. And
I remember that.
I think we had $1 billion in deposits in the first month.
Amazing.
So we've really been focused on growing that. It's got a lot of good reception. And, now we added all these features like being able to direct deposit your paycheck and get paid, up to 2 days early, and, pay your bills, pay your friends, all that kind of stuff.
So that's awesome with the new features. Like, why launch those now?
Yeah. So one, our clients have been asking for them. And so it's something that, we really take into account when we think about products is how are people using the products? And people were putting a lot of their money into their cash accounts and wanted to be able to do more with that money. And then also it's a really big, strong supporter of our self-driving money vision. So we have a goal to kind of automate and optimize our users' finances and kind of really help put everything. Imagine a world where you could direct deposit your paycheck. That money would be accessible 2 days early, and Wealthfront could figure out exactly where it needs to go to support your goals, whether that's, leaving some cash for your down payment and, putting some money towards your retirement and topping off some of your, emergency fund if you haven't done that, or putting money towards your 529 for your kids' education. And that could kind of all happen behind the scenes and potentially all happen, in that 2-day window before your, previous financial institution would have even given you your access to your paycheck.
That's amazing. And how important is it to be self-driving to really kind of fulfill your mission?
Yeah, I think the thing we learn when we talk to our clients is that people really, want to have control over what's going on in their financial lives. They're not necessarily willing to give up entirely control to everything, but they don't want to deal with all the mundane process of, I'm going to go and move this money here. I'm going to make sure my account gets to this amount and then schedule this. And I'm going to go adjust, how much I contribute this month because I'm getting closer to when my kid's going to college. And so I think it's really important to have your money work for you and have a lot of those things happen in the background, because it's hard to prioritize all these kind of administrative financial tasks that seem like a lot of overhead and a lot of burden. And so if it can self-drive, I think people will just, be more efficient and more optimized. And that ultimately increases the likelihood that they can achieve their goals, which is what everyone wants to do. And so I think it's just really important for all but the, couple of percent of people who like love doing this on the weekends, which is probably me, but I still actually appreciate the optimization because I don't have to think about it.
How much of your experience from Grow, your previous startup, kind of informs what you're doing today at Wealthfront?
So one of the interesting things about Grove, we took a different approach to a similar audience, and ultimately learned that wasn't the right approach. So we offered kind of a hybrid of human financial advisors and software. And I'd always thought that that may or may not be the case, but it was a hypothesis I wanted to test. And ultimately, we learned that the cost of having humans in the loop at every step of the way just doesn't provide enough value to kind of create a big company that will solve these problems for lots of people. And so towards the end, we kind of realized the approach we thought we needed to take was to really focus on software. And we looked in the mirror and said, well, do we want to go rebuild a software company, or do we want to take all the learnings that we have from working with kind of millennials who save to help figure out how to achieve their goals and kind of apply them to a company that had spent the last decade building out kind of one of the more robust software platforms in the industry.
And I guess checking and core banking plays a big role if you want to move into self-driving, right? Like
exactly. So
it's like the heart of the whole thing or the brain of the whole thing, or how do you think about it?
Yeah, I mean, so the way we believe self-driving money can work is money comes in, and most people, their money comes in from their paycheck, and then it has to go somewhere else. So your kind of main spending account, if you will, where your paycheck comes in, is kind of like the hub for all of that happens. And the more sophisticated that hub is, the more you're able to self-drive quickly, put things to the right place, not miss out on opportunities to earn interest. All of that. So if you kind of have that account in easier control and don't have to rely on, third-party APIs to connect with things, you're able to offer a better experience.
That makes a lot of sense. And does it change? I want to get into who your audience is, who your customers are. And I'm wondering if moving into self-driving money changes the flavor of who your clients are, or can you talk to us about that?
Yeah, so right now, our core audience is millennials or young professionals, who choose us as their primary relationship over banks. They save. They're kind of there's this weird kind of stigma around millennials that millennials, are all broke and don't have any money. But there's about 20 million of them that are active savers. They'll probably accumulate significant wealth over their lifetimes, and that's kind of who we serve today. And that makes sense. We started with kind of investment products that were, really sophisticated, but not accessible to most people. But as you start to bring features like self-driving money and these, some of the banking features we launched recently, those are things that, maybe have a wider appeal, right? I think when you start your financial journey, first you're saving enough cash to build up an emergency fund, and then you're saving, enough for your short-term goals. And then you're starting to look towards retirement and college savings for kids and all that kind of stuff. And so Wealthfront as an investment only account kind of doesn't necessarily help you save for cash. Then we launched the cash account, and now we give you a place to start saving for cash. Now we make you not have to think about it, and it probably has an even wider appeal. So, I do expect to see, lots of people. This might resonate with more people, but I think our core audience is still millennials who save. And if you think about, the benefits of self-driving money is that we can put that savings to work. If you don't yet have savings, you're probably not going to benefit as much from a system that automatically puts your savings to work.
That makes a lot of sense. And what you're saying really feels like it positions Wealthfront in the crosshairs of core banking. So can you talk to me a little bit how you see yourself, how you see Wealthfront competing against banks, and I guess how you're differentiated in a way to be able to be competitive with some of the biggest ones out there?
Yeah. So, at its core, Wealthfront is a product company. We build software. That's like our core competency. You could see more than half of our team is engineers. And that's how we've grown up. And if you just look at the banking industry, you can see that I think in aggregate, they spend, 200 and something billion dollars on IT. JP Morgan spent, billions of dollars on tech, launched a product called Fin, didn't really work out. It's just not the core competency. I think people always talk about like the greatest innovation in technology and banking, to date is probably still the ATM card, right? Like that's how slowly they've innovated. And, I saw this working with a lot of institutions. They all have spin up these kind of teams for, product development and innovation. But at the end of the day, they're very slow moving companies. And you can see that in their response to what's happened, with the pandemic. People are sitting on hold for hours as banks try to figure out how they stop, being focused on branches and they start focusing on, delivering products and services to customers on their phones. And it's just something that we kind of could roll with pretty quickly because we're already a company like that. And, we have only a handful of product specialists, which are kind of similar to what a customer support rep would do somewhere else, but we have a strong belief that we should automate everything. And so, we think their jobs are to understand the deficiencies in the product that couldn't be automated and try to inform the product roadmap so we can automate them. And we've been able to scale to, hundreds of thousands of clients with just 12 of them. And we haven't had these kind of, long wait times that a lot of financial institutions have been having now. So it's just kind of our DNA to build products.
Amazing. That's a great stat. So let's get to that. I mean, we've had a lot of guests on this program talk about sort of the move, obviously, to digital banking being accelerated during COVID. People are sheltering in place, like branches aren't open. People are looking for digital solutions. So how did you guys fare during the pandemic?
Yeah. So
faring, because obviously it's not over.
Yeah. I know. We have a long time, I think, before we can kind of get back to completely normal. But yeah, so I think we fared pretty well in that, we didn't have clients having to sit and wait. We were ready for this, right? We transitioned the entire company to remote work, and that didn't really affect, hold times. It didn't affect, client circumstances. When we realized that people had questions about the pandemic, we could pretty quickly build that into the product. So we had, in-app question Q&A that would kind of answer kind of common things that were new to people, but we knew the answers to, so we didn't have to, deal with as much email and as much phone calls. So we really tried to automate all of those behaviors, and, we're still focused on innovating the core products. And so we've launched these banking features during the pandemic. We think that that's something that's really valuable to people. It allows you to, with your kind of core account that you deposit your paycheck, to earn interest, which, while interest rates might not be where they were before, it's something that we still think is important to do for your core spending account where you're keeping, the cash you need to pay your bills.
Who do you think your marginal customers are? These people coming from traditional sort of banking institutions? Do you have any qualitative or quantitative information about like who these people are?
Yeah, I don't think so we launched a lot of these banking features to like a limited availability over the last month and to the wider audience over the last kind of day or two, like this week.
A little early for the data, yeah.
Yeah, so I can't tell you exactly who they are outside of our core demo, but I can tell you that most of the clients coming over are, it's interesting in the kind of fintech ecosystem, you kind of always assume that your other fintech companies are always your competition. But if you look at where our clients are coming for, they're mostly coming from traditional banks. And if you look at the average, checking account in the industry, it's hard to find one that doesn't actually have fees just to keep the account open each month, which is something we thought was, we didn't want to offer. It's hard to find an account in a bank as a checking account that pays, much interest at all, which is why even in this kind of depressed interest rate environment, we're able to offer kind of 4 times the average that checking accounts are offering. So I think we just are seeing people who, kind of are more or less fed up with their banks, and, the one value that, you could have, and unfortunately our team doesn't have of branches, is not even something that's relevant anymore. Right. You can't even go in, but we actually talked to our clients about whether they go to branches. And I think something like 40% of them haven't even gone to their financial institution's branch in the last year. So it's just not something that I think is appealing to this generation now that we can do everything on our phones, and it's something you pay for. So I think we did some research and found that the average customer pays about $400 a year to cover the cost of their branch. So it's just something that I think our customers would rather get back in the form of products, in the form of interest, in the form of features, than in the form of having a place to go that kind of doesn't serve a lot of purpose in a millennials kind of world.
Interesting. So you've established like sort of self-guided money, self-driving money as a sort of overarching principle for the firm. So where does that leave you in terms of future products? Like, are you rolling out more banking features in the future?
Yeah, so we'll always continue to add more features to the banking product until, it kind of meets all needs and, all things. And so we think we started with a really core feature set that delighted our early customers as we tested it. As for what comes next, I think that self-driving money vision is something that, we're going to continue to make progress on. I'm working on a product right now that we're kind of externally testing lightly about starting all of that automation. So, make sure that this account, whether it's at Wealthfront or not, if it ever gets over a certain amount, kind of auto sweep it to the place that I want it to go. And you could see that evolve to the point that it's, oh, wow, when any of my accounts have any more than they should, make sure we automatically put that in the best place possible. And similar to our investment account, where you just invest in the Wealthfront investment account, you choose a risk score. We don't have to come to you every day and say, hey, should we rebalance this? Should we, should we tax loss harvest here? We just kind of do that in the most optimal way. You could see that happening with your money sitting in other accounts, and it's like, oh, it's time to, you have too much cash right now. Let's put it to work, and we'll put it to the most optimal place because we understand you, and we'll of course give you controls so you can make sure that it's not doing the wrong thing, but it can start to get put to work right away. And so that's something we're working on that you'll see coming out over the coming months to just kind of continue towards building a better, more optimal financial situation for our clients.
That sounds like a very complicated product to build. Is it?
Yeah, I mean, it's definitely, finances are different for each individual. And so you have to take into account a lot of circumstances. But at its core, I think, we're a product company. So, talking to customers, understanding them, we have, both researchers on the product team and the design team to kind of help make sure we understand our customers really well. And so I think we do a pretty good job of making sure that we can ship something delightful that, doesn't try to make something that could be simple complex.
Got it. We have time for one last question, Chris. And one of the things we were looking at Tearsheet was the surge in sort of free trading apps. Robinhood, which has been doing great. I think they added like 3 million new accounts like in March and April. How do you guys make of the whole sort of rise of free trading and things like that?
Yeah, I think it's really interesting. So, we kind of have a strong opinion that day trading is not really investing. So there's a kind of difference between free trading and kind of what we've been seeing in the last few weeks and months where, individuals have been able to drive the prices of certain, stocks up, 100x and then down again and that kind of stuff. So day trading is, I would say, a lot more like gambling than it is about like investing. So if we separate the two concepts, one is, free trading and making it more accessible for people to get in the market and start to invest and that kind of stuff. And, I'm generally supportive of that concept. It's why, we with the Wealthfront account, the investment account, we haven't, charged for trading, in that account. And, but when it comes to the kind of amount of day trading happening right now, I think it will likely end up with a lot of money lost for a lot of people.
Lots of tears.
Yeah, there's kind of decades of research to show, that active investing strategies don't outperform passive investing strategies. So, I could send you as many as you want, and pick a number, and there's at least that many studies to probably show that strategy doesn't outperform for the average person. And so, I think that's just kind of something that it's much more exciting to talk about the story of one person that turned, $100 into $1,000. But behind that story, there's probably, a lot more stories of people who bought, options that they didn't even understand that, they lost tons of money on. And that's kind of the disappointing and unfortunate thing, especially for an audience of people that are just getting started saving. Because, the earlier you start to put money away for the long term, the better in terms of your financial future. So I think that's the core. The only other thing I'll say is businesses are really different. Robinhood makes money off the number of trades they make. And we kind of make money in our investment account off of, as a small fee on the percentage of assets. So our incentives are to have you, have as many, assets as possible. So, our incentives are really aligned. We want to grow the account. We're not making money off the number of trades you make.
That's a really good way to put it. Chris, thanks for joining us on the Tearsheet Podcast today.
Yeah, thanks for having me.